Welcome to the Mines and Money Online Connect Virtual Mining Conference. My name is Christensen. I'm an editor with KITCO News. I'm really excited to be part of this discussion today. Volatility has roiled financial markets across the board. Platinum group metals is no exception. Russia's war with Ukraine has threatened to disrupt the palladium supply. It's also impacting the auto sector industry. Fundamentally, PGMs face difficult futures as we transition into this green energy. Here to talk about everything platinum, palladium, and rhodium is a distinguished panel. Wilma Swarts from Metals Focus, Trevor Raymond, head of research at World Platinum Investment Council, and Jeffrey Christian, managing director at CPM Group. Everyone, thank you very much for joining me in this discussion today.
Thank you, Neil.
So I guess, with everything going on, I really wanted to start with a broad question, and this is for everybody. There's so many conflicting events happening in the marketplace. So the first question I wanted to start with, and this is for everybody, what do you think, what's the health of the precious of PGMs in the current environment? Wilma, let's start with you.
Well, thank you very much for the opportunity to have this conversation. Yeah, I think the health of the PGM industry is a little bit like, it's quite a mature market in many instances, but there are so many variabilities that are impacting it at the moment. Overall, quite a healthy market. There is, record basket prices for the mining industry from a platinum, palladium, rhodium perspective, some of the minor metals as well. But we have seen quite significant challenges, especially in its key sector, which is the automotive sector. And looking forward, that transition is going to have an impact, some positive, some negative. But overall, I think that there is quite strong demand still from the automotive sector, irrespective of the challenges that it is currently facing.
Jeff, what do you think? What are your thoughts on PGMs?
I'm not sure how you define the health of a market, but I think that, Wilma's right. The markets actually are in pretty good shape. You have mine production, which has suffered from lower prices for a long period of time, especially lower platinum prices, that are now in better shape. There are still issues related to South African platinum group metals production on a longer term basis. Demand is picking up. You're seeing a revival of demand in the auto industry and electronics for palladium, in chemical and petroleum refining catalysts for platinum, palladium, and rhodium. You're seeing a relatively good market. Investment demand is still kind of lagging. And then I have to say, this is talking about year over year situation. The advent of Russia's invasion of the Ukraine has put into question some of the things, and we've seen prices spike up, especially for palladium earlier this month in early March as a result of that. But sort of taking that Russian invasion of Ukraine aside, I think the markets are in pretty good shape.
Mm-hmm. Trevor, you get the last thought in this question.
Thanks, Neil. And I think, yes, I agree, in good shape. Obviously, good earnings from producers, good demand growth. I think one thing we focus on investors, and one measure of health that I think is actually in really good shape, is disclosure. I think for investors trying to make sense of platinum and palladium, there's just a lot more information than there was 3, 5, 10, 15 years ago. I think there's a number of commentators. We all have slightly different data series. But an investor can get his head around supply and demand. He can also understand some of the indicators. And it's really those indicators that are being quite useful at the moment. Lease rates, EFPs between the futures market and the physical market. I think we've got a lot of things that are providing us with indications that are helpful, especially when you're in a period of such volatility. So I think, and turning to platinum particularly, constrained supply, as mentioned, and certainly demand growth potential with a lot more granularity that gives investors the confidence to invest.
So now let's look at specific metals. I wanted to start with palladium. I think that's kind of been the most exciting. We saw record highs in early March above $3,400 an ounce. What are your expectations? And Jeff, I guess you're the one who brought up prices. So I'd like to start with you. I mean, have we seen the high watermark in palladium? Does the market have room to grow to get back back above 3,000?
Our expectation prior to the Russian invasion of Ukraine was that we would see palladium prices decline over the course of 2022, 2023. You're seeing a shift away from palladium intense catalysts toward more platinum intense catalysts, and that's beneficial for platinum prices and kind of negative for palladium. We also had an expectation of about a 400,000 ounce increase in palladium supplies from Norilsk for this year compared to last year. And that's got to be called into question because of the war and issues. Right now we have seen no interruption, no sanctions, no interruptions in palladium supply or PGM supplies from Russia. And quite frankly, we don't think that we will see them unless the situation gets now really hot. Now, in order to say, well, will we see palladium above $3,000 again? That depends on the course of the war. And I'm not going to play military strategist. If we see some sort of ceasefire and a humanitarian relief effort, you could see palladium come back off relatively sharply. And if you see the war heat up and NATO and the United States become involved, then you could see palladium over 3,000. On a longer term basis, as I said, we have thought that the price of palladium would be coming down over the course of 2022 and 2023. We do have a spike. We take our projections out now 28 years to the year 2050, and we do have another spike in palladium prices over the next few years. That was a projection made before the war. And, so part of it is waiting to see how the war shakes out.
Is a lot of this based on supply and demand? I mean, we have the one thing that has been supporting palladium has been this dearth of supply. Wilma, is that what we should be paying attention to?
Yeah, I think palladium definitely is more of a fundamental story. We did see, in its heydays, we did see ETF holdings quite high, and that's come down substantially where it is now. It's almost not worth talking about palladium ETFs because there's very little still in the funds. It's from a supply demand perspective, it is an automotive story. We have a slightly different view. I think, we do have to define between a pre-war and post-war perspective on supply and demand for palladium in the near term, as well as in terms of the price. So, from our perspective, palladium still has a lot of legs, even this year, if the automotive demand is there. Yes, we agree that there is certainly substitution taking place, and the rate of acceleration has been, significant compared to, what we saw in the early days. But, gasoline cars are still making up quite a substantial share of the automotive sector. Pre the war, we would have, we would have expected the chip shortage to unwind. We would have seen Q4 really, production back to pre-pandemic levels, and that would have given us a potential lift in prices. Agree with Jeff. I think that if everything unwinds, we wouldn't have expected the prices to be where they are for palladium. We never expected to see a price above $3,400. But certainly, I think that there is so much uncertainty. Then from a supply side, again, similar to what Jeff is saying, that we did see, that the South African producers, their ability to supply has made a difference. The opportunity, the impact that the flooding in the mines had in Russia during 2021 certainly did see that spike. And if we have something similar happening on the supply side, again, that will tension the market. We have palladium, we forecast palladium being somewhat in surplus, slightly, almost close to balance for 2022. That was pre-war. I think that there is so many moving parts at the moment, but certainly I think it's not going to be it's going to be a supply impact. It's going to be both. I think that there's a significant impact on the automotive sector, which we haven't really been able to qualify and clarify at these early stages.
Well, and not only that, I mean, and I want to bring Trevor into this too, because, and Jeffrey mentioned this, this idea of substituting, are automakers going to be spending, $3,000 an ounce on palladium when they can, get platinum for so much cheaper? And Wilma, I just, sort of wanted to ask, is substitution a threat to the palladium market? And then get Trevor on his thoughts on this as well.
I think rather than a threat, it is also balancing. I mean, palladium was in structural deficit for such a long period of time that it is in the automotive industry's interest to actually have a balanced consumption of these three metals that they use for the emissions abatement. And so, yes, I think, of course, we are going to see that as the price is a key factor in the automotive sector. So, for as long as platinum is able to do what palladium can do in the AutoCAD, in the exhaust system, then we could see an increase and an acceleration. And we have seen that, we have seen an acceleration of the platinum, substitution of palladium by platinum. So is it a threat? At this moment in time, I don't necessarily see it as a complete threat. I think that there's still a substantial amount of palladium that will continue to go in, but there's a rebalancing and a healthy amount of platinum that will be used in the exhaust system, which balances for the automotive sector their use of the three metals.
Trevor, what are your thoughts on sort of platinum versus palladium in the auto sector and the idea of substitution?
I think Niels, just to stay with palladium for a bit. I mean, I think there's probably two other issues that are quite important, and something that we've been saying for some time is that what goes largely undiscussed is that the Chinese vehicle manufacturers don't have the luxury of a forward PGM book like the US and the West have. So what we've seen is that the short-term price of particularly palladium and rhodium have been heavily influenced by the China OEMs that tend to buy for near-term use. And what you've got is a state-owned joint venture, and to have a forward book that goes against you would almost be in the category of a crime against the state. So what we have seen since 2017 is that those Chinese automakers have been buying palladium and rhodium in the spot market. And that really has been dominating prices. We've seen significant volume go out of the palladium futures market, yet very strong prices, and particularly recently. So I think that fact is quite important to recognize the short-term buying of both palladium and rhodium by those Chinese automakers. I think how that plays out, obviously at the moment, we've got a lot of short-term volatility associated with Russia, and certainly that's been an influence. I think the second thing is that the transition between internal combustion and electric is, I think, the structural issue that the other two speakers have raised, to say that logically it appears that the palladium demand profile should get softer, and as a result, the price should weaken. Our view is that that's going to take a lot longer, perhaps, than people are thinking. So to my mind, the Chinese short-term buying for short-term use is likely to remain strong probably for the next 2 years. I think substitution certainly will ease that. It's part of balancing. And right now you've got concerns about Russian supply, and it's really not just about whether that metal can come out of Russia, it's whether the US automakers actually want Russian metal in their catalysts. So I think that's something that will evolve and play out. But just in terms of palladium, I think a lot stronger, and rhodium a lot stronger for longer because of that. In terms of substitution, we've been of the opinion that there's really substitution that is discussed openly in the market, and then there's substitution that is confidential and not disclosed by the automakers or the fabricators. So we believe right now there's probably a lot more substitution that's already happened pre-Russia. With post-Russia, I think there could also be a drive by the automakers to accelerate and grow some of that substitution in the short term, and we might see that coming through as well.
So Trevor's brought up a lot of really interesting points. Russia controls about 40% of the palladium market. Jeff, can the auto sector say we don't want Russian metals in our catalytic converters?
Not really.
Okay, next question.
Yeah, I can elaborate, but yeah, look, on a certain level, there's a lot of palladium around, but the people who own that palladium aren't necessarily beneficent providers of palladium. And the fact that the price has done so well, not only for the last month, but also over the last 15, 20 years, they are happy to hold that palladium for a variety of reasons. The reality is that the world needs Russian palladium to meet automotive demand, which is why the West has not put sanctions on Norilsk or Potanin or put any kind of imposition on PGM exports.
So, and Trevor actually brought up another question. I guess, Wilma, this is for you. By 2030, I was reading EIA, they expect 50% of cars sold to be electric. Is this a realistic target? How big of a threat is this for PGMs? I mean, especially palladium, I guess, because it is mostly automotive, 80% automotive. I mean, platinum at least has a little bit of jewelry and some investor demand, but palladium just relies so much on the auto sector. And I see this threat to palladium in the long term. Is it real, or am I just worried for nothing?
Well, I mean, I guess, this is a precious metals conversation. Automotive sector and the scenarios there is a different debate, but we can question a little bit, so our base case does not have 50% electric vehicles. And I guess we also need to take a step back and understand what is meant by electric vehicles. Do they include hybrid electric vehicles, or is this pure electric vehicles? So are they saying that it's for 50% pure? If it's 50% pure electric vehicles, I have my doubt that is the possibility. I think that there are so many challenges, and we're seeing the news flows come through a lot more around the base metals. Now, we're a precious metals analyst, and so don't really necessarily comment on the other technology metals, the green technology metals, battery metals, etc. But I am seeing, we are aware, and we do keep an eye on what is evolving in terms of that battery material space, and there are some cracks. That kind of suggests that we may not see the kind of rate of adoption, particularly that is expected. And so if we say, it's electric vehicles, and that's a broad terminology, which I think is more the case, then you have hybridization associated with that, and hybrids are PGM neutral, platinum group metal neutral, or even positive in many instances. So don't despair. So firstly, we don't think that it will be that kind of high rate of adoption. And secondly, I think we do need to be quite clear on what we mean by electrification, because hybrids are sometimes classified as electric vehicles, and they're new energy vehicles. And so, I do think that they still use quite a healthy amount of PGMs. If we do see complete battery electrification or 50% battery electrification, of course, palladium will suffer most. I mean, I think that we do, platinum has many advantages. And when I say palladium will suffer most, palladium and rhodium will suffer. The rhodium is even more exposed to the automotive sector at this stage.
Jeff, what do you think? Do we reach 50% in 8 years?
Our projection is that we will have about half of the auto market in terms of production and sales, electric vehicles by maybe the year 2050. There's no way that you can have that in 2030. And I'm surprised that the EIA would say it. We cue off of the International Energy Agency. The International Energy Agency projects that by 2050, petroleum will still be the major source of energy for humankind. Natural gas will be the second. All renewables combined will be a third, and coal will have been displaced by all renewables combined as the third largest in 2040 and still be a very significant third. The capacity to move to 50 million vehicles a year being electric does not exist for doing it within the next 8 years. And Wilma said everything that Wilma said was true. And one of the things is you have to look. Hybrids are actually more positive for PGMs because they stop and start. You have a cold start. You wind up using more PGMs, and I think specifically more platinum in your catalyst because it operates at a lower temperature than palladium. So hybrids are actually a little bit more beneficial for platinum group metals than ICE engines that burn petroleum products. And one of the topics that we haven't really talked about that's affecting all of this is the move away from diesel fuel to petrol in Europe and in India, which actually has an effect on PGMs. But we look at the need to build factories to build motors and controllers and batteries and everything else. We look at the need to build mines. If you look at projections of electric vehicles and the raw materials, there's not enough lithium around, there's not enough high purity cobalt sulfate, high purity manganese sulfate, rare earth.
We can't even get nickel.
And, the optimists say, oh, well, they'll build those mines and they'll build those factories. And probably they will, but they're not going to do it in 8 years because there's this massive capital constraint. The automakers buy their components from smaller companies that cannot effectively raise money. And they're not getting offtake agreements for the most part from the major auto companies because the technology keeps changing. So, right now, last year, I think we built 6 million motors for electric vehicles and 6 million electric vehicles. To go to 50% of the market, you're talking about a market that's about 94 million vehicles a year. Okay, you're going to need, 45, 50 million motors. You're going to need factories to build those. But you know what? The motor technology may well change and we may not need the kinds of motors that you would build your factories for. So, we're not going to give you an offtake agreement. So there's a capital constraint. There's not enough electricity. Most of the electricity still comes from burning hydrocarbons. So it doesn't actually clean up or have any major beneficial effect on climate change and carbon dioxide emissions, which means that you could have this massive consumer backlash on electric vehicles. Half of the world that is half of the 6.2 million vehicles that were bought last year were bought by Chinese investors or Chinese consumers because the Chinese government said, you will buy an electric car. The other half were bought by people who are worried about climate change in Europe and United States and other places. And when they realized that these things really don't super reduce carbon dioxide emissions, there could be a consumer backlash on electric vehicles. So I think there's all kinds of constraints on how fast we will move to electric vehicles. We're not negative on electric vehicles. We are realistic on electric vehicles. We do think that they will take market share, but it's going to be much more slowly than the politicians and the CEOs say at the auto companies. It's going to be more in line with what the procurement and engineering departments at the auto companies say. And they say, yeah, maybe by 2050, we might see half of the market approaching electric vehicles. And then, as Wilma said, you have to say, are you talking about pure battery powered electric vehicles, or are you talking about hybrids? So as a result, you're going to be using well into the second half of and probably throughout the second half of this century. And electric vehicles will gnaw at the margin of the demand, but they are not going to obviate demand for PGMs.
Okay, so then this is a question for everybody then, if we're going to see consistent demand, through the at least, the first half of this century, what looks better, platinum or palladium? Palladium, record highs, pushed above $3,400 an ounce. Platinum has really just completely struggled. I mean, you had, still trying to recover from Dieselgate, and then you have, COVID impacting auto productions and stuff like that. But does palladium remain overvalued and platinum undervalued? Is there a catch up? Especially now that we know that there's a long-term prospect for these metals, what looks better? I'm going to start with Trevor from the World Platinum Investment Council.
Thanks, Niels. I think everything that we've touched on points to the fact that platinum is looking pretty interesting. So in the 7 years we've been trying to help investors make more informed investment decisions, we've got a lot more information. I think from a sentiment point of view, certainly Dieselgate has caused a problem, decline in jewelry demand in China, certainly 500,000 ounces down. Those are all serious concerns. Where we are right now, there's probably 4 things that are relevant to why invest in platinum. I think you've got constrained supply, as was mentioned, underinvestment through a long period of low prices. And despite all the earnings being quite fantastic for those mining producers from the prices of palladium and rhodium, the expansion projects haven't kicked in yet. And you've got the 3 major producers all indicating quite publicly and quite clearly that their supply is either flat or declining over the next 3 years. So there's really unlikely to be any change in output from South African platinum supply, 72%, or certainly palladium or rhodium from that source. The second thing is a bit of a conundrum, Niels, is that we published our largest surplus last year for platinum market. And in fact, the market's been tight. Lease rates are high. We've seen people moving metal from the NYMEX futures market to meet shortages in the OTC market. And the main reason for that is massive imports of platinum into China. In fact, last year, China imported about 1.3 million ounces more than its identified demand in automotive, jewelry, industrial, and investment. And that essentially absorbed that entire surplus. So I think it's really been about sentiment as to why platinum hasn't been revalued. There's been a perception that the platinum market has been in consistent surplus, whereas in last year it was actually in deficit as a result of Chinese imports. So where those are going, we think there's been some speculative activity, quasi-speculative by people in the supply chain. And we certainly saw that during the 2014 strike, and we saw it during the 2008-2009 global crisis, where the jewelry manufacturers took 1 million ounces of extra metal. And then the third, I suppose, biggest and most important is demand growth potential. I think substitution is a big part of that, but loadings is a very big part of that. And we've seen much higher palladium loadings to meet current emission standards. And certainly platinum combined with substitution is quite a big deal. And then I think the sort of interesting thing is that the hydrogen economy certainly doesn't shoot the lights out in terms of short-term demand, but platinum's used for electrolyzers to produce green hydrogen and for fuel cell vehicles. So what you've got with platinum is a range-bound price that seems to have a good downside protection with very low likelihood of going below that. with upside potential to move towards the palladium price. And those two really should trade at parity at most times. And then what we found is that for the last few years, you could argue that investment demand hasn't made too much difference to the platinum price, whereas right now we're in a very tight market. So certainly any increased investment demand is suddenly more relevant to price discovery. And that's been fueled, we've worked very hard for 7 years to get a much wider base of people looking at platinum. They've joined the dots between platinum and the hydrogen economy, but it's not those ounces that are attracting them. It's actually the constrained supply and short-term demand growth from both loadings and substitution. And then medium-term, heavy-duty fuel cell vehicles, certainly, and the comfort that you've got a long-term, the 8, 10, 12-year horizon, where you've got a few more million ounces due to fuel cell vehicles. And then I think what Europe announced last week to try and, obviously address energy security risk is that by putting 20% of green hydrogen into their natural gas network, they can sort of halve their reliance on Russian gas. And that's likely to happen even if we hope there's an early resolution to the conflict. So I think those indications are really, really strong in platinum's favor. And I think we've got a far greater set of disclosure and indicators that help investors take a view on that, Neil.
Fantastic. Wilma, less than 10 years ago, platinum was trading at a premium to gold. Now we're seeing a record deficit, the wide, a record gap between platinum and gold price. So what are your thoughts? I mean, does platinum catch up? Does palladium continue to take the lead? Which is there a metal that you prefer?
Yeah, so as a platinum group metal specialist, I love all the metals, but but saying that, I do think that, if we just look at the fundamentals, and I really think, comparing to gold, yes, definitely. I think that, we've seen some moving parts there that has seen platinum shift into that discount compared to its yellow sister. Compared again also to palladium, having traded at a premium to palladium and then shifting to a discount on palladium, it's reflected in the fundamentals by and large, and the strong fundamentals that we saw for palladium. We're still bullish, as I mentioned, for many reasons about palladium in the near term, but we do see that there is a switch. We've had palladium in structural deficit for many years, and it's shifted into surplus most recently, given the chip shortage and the impact on the automotive sector. But as the automotive sector recovers, we do think that there is still some legs in palladium, but that platinum will shift. We've got platinum in surplus. At this moment in time, we see platinum will shift into deficit. And really the drivers there are exactly what Trevor has mentioned. We are seeing substitution. And for as long as there is this differential in price, and cost consciousness of the automotive sector, you'll continue to see that. The hydrogen economy, it's a big thing. The security of energy certainly has been highlighted, and I think that it has given potentially further impetus. Hydrogen, when we look at it, before we used to think about platinum only in fuel cells. I think if we look at the hydrogen economy, platinum plays a more dominant role in many elements of the hydrogen economy. You've got hydrogen production, you've got storage where there's platinum consumption, you've got the fuel cells, so you've got stationary fuel cells, you've got transport, and all of those have predominantly a platinum bias to it. So for that reason, certainly there's reason for optimism. And then rhodium, of course, is also at the behest of the automotive industry, and that transition in the powertrain, the rate of transition in the powertrain will also influence rhodium. Again, rhodium is the best NOx abatement metal, and whilst we have a requirement whilst the emissions legislation continues to reduce the limits, we are going to see an increased requirement for rhodium. So I think that is there are pros and cons. Long term, I think that there are a lot of positives that benefit platinum compared to the other metals that are highly exposed to the automotive industry.
I definitely want to talk more about this hydrogen economy and the idea of green hydrogen. I just want to get Jeff's opinion first on, to put his feet to the fire, which metal he prefers, if he has a favorite.
Well, we have been advising our clients to buy platinum, intermediate and long-term investors to buy platinum for a couple of years now, a few years now. We have said, you know, the price was in range bound between 800 and 1,000. And we have said that we thought that in the intermediate term and in the long term, platinum was more attractive than palladium and rhodium beyond this year. And that still is our view. You know, we're seeing platinum move out of that $800 to $1,000 range last year and so far this year. Our view is that, you know, we'll have a range, and maybe 1,000 is the floor this year. We're pretty close to it today as we're speaking, but we do think that platinum is more attractive than palladium. I think that palladium has the capacity to come down once we get beyond the Russian invasion of Ukraine. And rhodium is interesting because, you know, we started using rhodium in autos in the United States in 1980 for model year 1981. And we have been in a deficit in the rhodium market for most of the last 40 years. Our view is that we've moved to a surplus now of total newly refined rhodium coming from mine production and from scrap recovery relative to fabrication demand. And we think that surplus may actually persist for a few years. And that could cause the rhodium price to subside once the Ukraine war is over again. But we remain very much, as a society, we remain very much committed to needing platinum, palladium, and rhodium in auto catalysts. And the rhodium market is not as well supplied as platinum and palladium. So I think there will be upward pressure on rhodium prices in the longer term. But for the next few years, you may see the price subside a little bit. But, you know, the short answer to your question is it's platinum.
Let's just quickly talk about rhodium. It's not a metal that I really like to talk about just because it's so illiquid and it's hard to invest in. But you can't, whether it's a diesel, whether it's gas, whether you use palladium or platinum, rhodium is the one metal you cannot substitute in these catalytic converters. So, you know, is this a metal that we should be looking at? Wilma.
Well, I think, of course, rhodium is a metal that one should always look at. Is it a metal that you invest in? I think it's challenging for the reasons that Jeff mentioned. It's not a very liquid metal. It's not easily tradable. So you know, I think that it is quite vulnerable to the automotive sector. And it is vulnerable to finding solutions for NOx abatement. So I mean, we did see in diesel catalysis, we saw that it dominated for a long time, and then we saw the introduction of SCR and you know, non-PGM based mechanisms. So I think that it's not completely it is vulnerable to technology advancements. And it is, you know, it is a metal that is so thinly traded that it's not an easy to invest in metal.
Switching gears, I want to talk, like I said, I want to talk about hydrogen economy. And I guess the one thing, you know, Jeff, you said, you know, we don't have the electricity, you know, for EV vehicles. Could hydrogen fill that? Like, I mean, you know, it could not going to say it's going to, you know, solve all the problems, but you know, is this viable, and can platinum really take off from a focus on hydrogen energy?
It's a really complex subject and answer. And well, let me see if I can compartmentalize it.
We are nearing the end, by the way. I should start.
The key for hydrogen is to safely and cheaply ship it, store it, and distribute it. And the key to doing that is liquid organic hydrogen carriers. CPM Group was working for years with a company that had a very interesting technology. They had the molecules that could handle enough hydrogen to make it useful for motive transportation. And you know, basically a lot of the chemicals that you use that you can hydrate and rehydrate, dehydrate, and then rehydrate to ship, store, and distribute hydrogen safely only can handle about 2% hydrogen content, which is good for stationary power generation, but not enough hydrogen per weight for motive transportation. The company that we had identified has 6 to 12% hydrogen content. That's a game, you know, that radically changes everything. And, you know, they need financing to take that technology to commercialization. But that would change everything. Now, the problem, and Trevor might, you know, want to have something to say about this. If you talk to the platinum industry in South Africa, they say, yes, we'll get liquid organic hydrogen carriers. And one of them is actually invested in a company that is looking into this technology. We'll have liquid organic hydrogen carriers, and that will allow us to safely and cheaply distribute hydrogen. And then everyone will use fuel cells. But if you talk to the auto industry, they say, wait a second, if I can get hydrogen safely and cheaply to the pump, I will use a hydrogen engine, an internal combustion engine that burns hydrogen. And it costs half as much capital cost as an ICE engine that burns petroleum-based products. And it has lower maintenance costs. And, you know, so if I can get hydrogen to the pump, I'm going to go with ICE engines. And that would be devastating for the PGM industry. You know, the good news is it'll take decades to get there if we can get there at all. I'm only 67 years old, but my entire life, people have been talking about moving to a hydrogen economy. And we're probably closer now than we have been in 67 years, but it's still going to take a long time. And I probably am not going to live around long enough to see it, you know, so it's a long-term issue there. But I do think that hydrogen, you know, it's the joke in the PGM industry is that fuel cells are the power source of the future, and they always will be. Hydrogen has been the fuel source of the future, and someday it actually may get there. Now, Trevor, let me just say this before Trevor responds. That doesn't mean that I don't think fuel cells have a place in motive transportation. And I think our projection is that we think there might be like 600,000 fuel cell vehicles on the road by 2050, mostly in fleets where they can be managed safely and effectively. And I think fuel cells have a great amount of capacity in stationary power. Whether or not they're using platinum is another question, but you don't have enough time for that.
Trevor, I want to give you the last word, the last thought on the hydrogen economy. You know, what is this? Is this real? What does this mean for platinum?
Niels, yeah, thank you. I think what's changed over the last 2 years, certainly there's been a focus on sustainability, fires, floods, pandemic. I think what the world's realized is that we need to do things a little differently. And the one thing you can't get away from is that if you take wind or solar power electricity and you use that to electrolyze water and produce hydrogen, and you then take that hydrogen and you put it into a fuel cell electric vehicle, not only are your emissions zero, but you also have reduced your reliance on fossil fuels. And I think that's the key. The world knows we need to decarbonize and we need to reduce our reliance on fossil fuels. So I think to achieve that by 2050, we're going to need every single technology we can get. The fact that battery electric vehicles still have a problem of moving the emissions from the tailpipe to the coal-fired power station is being recognized. The fact that the footprint of producing a battery is a problem from a CO2 point of view is an issue. I think the transition between fully internal combustion to fully electric, which will be a combination of battery and fuel cell, will take a long time. And the world has to focus on the CO2 efficiency of that internal combustion engine tail. And I think that's where mild hybrids come in. That's where the diesel engine comes in. We've had a number of automakers announcing that they are developing new diesel engines for release in 2023 and new internal combustion gasoline engines. So I think what we know is that the hydrogen economy is a certainty to decarbonize, and it will form a very dominant part, whereas 3 or 4 years ago, we would talk about it as a science experiment. So that's a fundamental change. And then, storing, losing half the energy to convert from wind into hydrogen was always the argument, well, why bother? And you'd be stripping it from natural gas, which is a fossil fuel, so why bother? I think the real issue is you save half the energy and you can store electricity as hydrogen. So I think it's dominant. I think platinum's role isn't that ounce exciting in the next few years, but certainly investors that have become aware of this. And remember, there's so many people in China that are now saving for their retirement, is that they know the importance of the hydrogen economy to China means that platinum will have a dominant role in 3, 5, 10, and 20 years' time. And that's where perhaps in investment demand, bar and coin has perhaps gone a little unnoticed. So I think very critical to platinum's development over the next while. Thanks for that last word, Niels.
Like I said at the beginning, I was really looking forward to this conversation. You guys exceeded my expectations. I really appreciate your thoughts on the PGMs. Thank you very much for participating today, and thank you very much for listening to this discussion.